Let's bring in Mike Baghdady, Chief Market Technician at the Online Trading Academy, trying to make some sense of what's happening in markets right now from a technical perspective. Mike, if you could chart the Dow, the S&P, the NASDAQ, the three major U.S. indices. I mean, after the rout that we saw in global markets started out here in Asia, then transitioned over into Europe, and according to futures, we're setting out for a very tough comeback when Wall Street resumes trading after the Martin Luther King Jr. Holiday. Yes. It's got a lot of people saying that we could technically be in a bear market now. Are we?
If you look at the chart, if you look at the long-term chart that I brought, we are, I believe, in an intermediate bear market. If you see back in when there is like a topic formation around the 14,000 on the Dow Jones. And that lasted for a while, and the first break we had was in November 8th, and that was the first sign that there was some sort of a break of the structure of the chart. I mean, the actual structure foundation of the chart broke on November the 8th, and that was the beginning at 12,725. That was the first break. And now, as you see, we are coming down to the first support level where I have the ellipse at around 11,673, which we are at today at this moment in time.
Okay, so we're in an intermediate bear market. I mean, I was just reading something. Technically speaking, you're in a bear market when you've got something about 20% or so off-cycle high. So what are you telling us then, Mike, if you're saying that we're in an intermediate bear market? What, half of that?
Well, one of the characteristics of a downtrend or a trend is that you'll be looking at two things. You'll be looking at the structure of the chart, and you'll be looking at the momentum, the way the speed the prices move from one point to the other. And as you see, there is a lot of momentum to the downside. And one of the criteria of analyzing the charts is that momentum precedes price. So when you see on the chart momentum lows, the expectation is that you're going to get in the future lower prices yet to follow. So trends, as you well know, comes in many sizes. And when I say we are in an intermediate bear market, is that in the big cycle, it could be like a minor correction as far as the big cycle is.
Is there any sign of support? Everyone, of course, is trying to pick a bottom, but it seems impossible to do these days. What do the charts tell us on that front? With
relation to which index are you talking?
Okay, why don't we go to the S&P 500 since we've already taken a look at the Dow?
Okay. The first level of support that we would see on the S&P 500 would be around the 1192 level, the number that you have there. And when the prices has broken down yesterday, we are pretty much close to this level. That would be our first level of support because it was the high of 02, the high of the swing high of 02, and it was also the swing high of 99. So it should be coming back, the prices should come back to test these areas, and this is where the market has turned around previously, and I hope that the investors and the technicians would see that this would be an opportune time to start buying into the market again.
Okay, Mark, we're going to take a look at the NASDAQ and give tech investors a bit of a view on that one after this break. Do stay with us. Mike Baghdady, Chief Market Technician at the Online Trading Academy.